Hello, everyone, and welcome to the Franchise Show. I hope you're doing well. This is the show where we get under the hat of all things franchising, and it's a live show. Well, it's live if it's the 12th of May, 2026. And as you can see behind me, we now have the new summer version of my little Harry Potter-esque den. Those stairs are always there, but in the winter, they're covered up to keep me warm. Now, what do we do on the Franchise Show? Each week we take a new topic and a lovely guest, and today is no exception to that. But before I introduce our fantastic guest to you, let's let you know what the topic is going to be today. Today we are talking about franchising and banks and how those two work together or not in some cases. And it's live, so we love you to get involved. Pop in a comment, say hello, and get involved in our conversations, because you are the directors and the producers of this show, and the direction our conversation goes is up to you. I always say that this is how much I have written down at the beginning. That's not a lot, is it? You've got a bit more. No, but you see, someone's got to be organised, haven't they? But at the end of these conversations, I always have a huge amount written down, and that's because there's a lot of value that I get from this, and I hope you do too. So please get involved. So without further ado, let's introduce our lovely guest. It's Mark Scott. Mark, welcome to the Franchise Show.
Thanks for having me, Harvey. Very good to be here.
You're most welcome. Before we get into our topic today, perhaps you could give us a little introduction to yourself and how you've got into the world of franchising and how banking has been mixed into that in your career.
Yeah, I certainly will. Well, first of all, thanks again for having me. So I worked for Natwest for 39 years. Before leaving in 2021. For the last 23 years of that, I worked in the franchise team there. So quite a lot of knowledge of banks and franchising really from that. Most of that time I was heading up the team as well, which comprised of sort of 5 or 6 staff at a central level. And then we had, and they still have these local managers that we trained about franchising. So the local manager that you deal with as a franchisee or franchisor should have the experience. So that was the majority of my sort of franchise experience, and I like to think it's probably why I'm here. One of the reasons, I hope. Because after that, it went on a bit of a different direction, and I went to work for Azure, which is part of Franchise Brands, and managed, or was MD for most of the time I was there, to software development for franchise management systems, which obviously included a lot of the finance around the business too. But more recently, I've joined Partnerwise Franchise, which is a franchise consultancy, as the name implies. We sort of do feasibility studies for businesses thinking about franchising. We then get them ready to launch their franchise as a stage 2, if you like. And then stage 3, we help them to recruit franchisees, whether that be domestically in the UK or internationally, either way. And of course, at any point in time, happy to do recruitment for any franchisor at any one time. But you know, as a banker, and as you, I do like the fact that you like hats. So I thought for today, Harvey, I am the Lone Ranger.
That's good.
Well, that's a bit bent for me. Good. This was when I was Clint Eastwood on one particular, I think, fancy dress evening. And like yours, it's a bit bent in places.
It is. It is. That's very good. I like that. I mean, that's got to surely be the name of a business there. I know things are going beautifully at Partnerwise, but at some point in the future, you've got to start the Lone Ranger and wear that hat. I give you full permission. Don't give many people permission to wear a hat. I can only wear a hat now. That's amazing. Excellent. Look, thank you so much for that fantastic introduction. It's great to know your background, and my goodness, 39 years in the banking industry. There can't be much that you don't know about that, and 23 of those within the franchise sector as well. I mean, in your experience, we're going to get into this in a minute. Let's just quickly say hello to Simon. Simon Wise, a franchise recruiter here in the UK. Great to have you with us, Simon. He's put hello, franchise friends. So fantastic to have you with us, Simon. But let's get into this a little bit more. In your experience, what has been that sort of over those 23 years? What's that journey of the relationship of banking and franchising? Has it always been pretty sound, or have there's been some ups and downs across those 23 years?
That's a great question. I think on the whole, banks and franchising have gone hand in hand, and the main reason for that is obviously the investment that a franchisee needs to make. Often needs some sort of finance, so it is quite a one of mutual respect, where we know we want to work with each other to help and grow the sector. So it's always been quite good. I guess there is probably some exceptions to that for those franchisors that don't have a very good system, because no bank will fund them because it just doesn't add up. But I'm very pleased to say that over my many years of experience as a franchise lender, there were very, very few franchise concepts that we as a bank didn't support. And I think I probably speak for most of my, if not all of my, all the banks that are now in franchising. There's because of the strength and the proven ability of franchising, banks are much more willing to lend perhaps to a new startup in an area where they wouldn't do otherwise.
Yeah, I think you're right. I mean, that's always been my sort of take on the banking industry's view of franchising, because you've got that proven model, because you've got somebody behind that brand that has been experienced in that for a lot longer, and there's a better chance of success for a franchisee. I think that's why it makes it quite an attractive proposition for a bank. But when you said there that if it's not a good system, I mean, I'm thinking now, if you're starting your franchise brand and you're looking to make that appealing to a bank, I guess it's the same as making it appealing to a franchisee, because what you're talking about, I guess, is unit economics. Is it going to make money? Is it going to give a return on investment? And I guess from a bank's point of view, is it going to support the repayments of whatever funding is provided?
Yeah, absolutely. It very much is at the heart of any franchise business. You've got to have a proven concept yourself. I remember, I'm going back quite a way now into the noughties probably, there was an eBay business that launched with all guns blazing at shows and everything else, but they were trying to pick up on the explosion of the use of eBay, but it had never been proven. They just launched it with no proven concept or whatever, and it spent a lot of money and spectacularly failed because the banks wouldn't support it, because it had no proof of concept, no proven business really there. It was blue sky, and blue sky or an idea is just very much impossible to franchise, because you've got nothing you can hang your hat on. Forgive that phrase there, but so as I say, you really need to have that proven ability, and both as a franchisor, but then obviously the franchisees have to have something about them when they come in as a prospect, which the franchisor wants, but also if a bank is lending, the sorts of things that we would want as well.
Yeah, I guess that's the split there, isn't it? You're lending to a concept and a brand, but you're also lending to an individual that more often than not has a new limited company that they've just started, a brand new account. So it must be quite a complex decision. You spoke there of proof of concept as well, and I think this is an interesting one, because I speak to potential franchisors and people that are looking to franchise their business, and the point where they decide to do that varies. Certainly in the UK, it varies greatly from, you know, from within a few months, they get one location going, they go, right, it's time to franchise this, to I was speaking to someone who was considering franchising their QSR brand after nearly 17 years of growing 13 locations. And is there a good time, or do you think that varies business to business?
I think it does vary, because it depends what's going on in their business. So, for example, I'm recently started working with a franchise that launched in 2019. So we all know what then happened in 2020, and so whereas they were planning for quite good levels of expansion and what have you, that sort of took a bit of a hit for a year or two whilst the world got back to some sort of normality. And I think even they would say that, you know, they managed to get through it, which was fantastic for one. And then, you know, they've concentrated on growing their own network for the last 3 or 4 years, and have started to look at franchising. They're now, you know, gone from maybe one site, I think, in 2019 to having 8 and 3 more in the pipeline. So they've proven that the franchise that they have works in multiple locations. And I think they're now at that stage where they really do understand what works in a store as well. So they really now know that they're ready to do it and go that route. But you know, that could be a lot quicker if you've opened a few stores in a shorter space of time, sort of a year or two, maybe better. But I don't think anything that's been trading less than 18 months is perhaps not ready to franchise, because certainly at least 12 months you will need, but to go through all the different seasonality that a business might have. But of course, those early, perhaps 3 to 6 months, could be just a launch phase. So it might not be the period where the business is at its peak, I suppose. It's building up. So then you get to 18 months and you can compare a bit of like for like on the same period the year before. But I mean, I think in my experience, most franchise businesses that launch have been going for quite a lot longer than sort of a year or 18 months. As I alluded to, this business we're talking to has been 6 or 7 years in the making before they feel that they're ready and they've got the right structure around supporting franchisees, which is important as well. And you know, that's funny enough, I have had my banking hat on when working on their franchisee projections, and with my banking hat thinking, okay, well, if the bankers had all these numbers that you've got, we need to be conservative as what they may look like. So that's the other thing, that you, as a banker, you would always look at numbers and think, what's the worst case scenario of these stores? And that's sometimes the way bankers feel as to how the next one's going to go.
Yeah, that's interesting. The attitude of, I mean, use the word conservative, but it is a sort of a worst case scenario. And I guess that's quite a useful thing from a franchisee's point of view, because they're looking at this and they're trying to gauge, by talking to franchisors, talking to other franchisees, as to how successful this business is going to be. And nobody has a crystal ball. Nobody can predict exactly what's going to happen. But I suppose it's quite a good basis of that sort of, well, this is our base level because this is what the bank feels comfortable with. And that's the minimum, and it's going to go up from there.
Yeah. And as an ex-banker, it's been quite difficult to battle in my own mind in terms of what's it like? What's a new store going to do? It's probably more likely to be sort of how the new openings have gone, because they've learned more about it. But of course, you've still got the old ones. But the great news is for that business is that the like-for-like sales on their existing stores have gone up quite well this year as well, which in quite a challenging environment is great to see, which is why I think it's got success to come. I'd like to think. Obviously, you can never tell, but I think it's got all the right foundations to make a success of it. And that's not the only business I've seen. I've seen over those sort of 25 plus years franchisors that have started off and taken advice from whoever they're talking to, and a lot of people will talk to lots of people for advice, including their bankers, and then and then they'll learn, they'll listen, and they'll try things, and they might adapt to it, and then they will get the system right over a period of time. You know, they often hear about the first franchisees are not perhaps the best, but they need to have somebody as a pioneer to help them develop it. But interesting, I've heard recently how your first franchisees might be people within the business already, and that's certainly something this business is thinking about as well.
I think it's a really interesting because I think you're right. Those first franchisees often aren't the right people, or they are given a too big an area if it's a geographically based business. Sometimes people get it right, but I've spoken to many people who've got some really interesting ideas as to how they attract those early franchisees. Particularly, there was an idea where they were the franchisor, they took the risk and found the property, did the fit out, and hired a manager. Right now, that manager was hired on the basis that they would potentially become the franchisee after between a year and 18 months. Right, and they always knew that, and they always had an option to either continue being a manager if another franchisee was found, or to leave the job, or to become the franchisee. And I found it a really interesting concept, because then after a year, that manager who's going to become a franchisee really understands that business, has got some figures that are actually to do with that particular location. And I thought it was a really interesting way to do it.
Well, I'm sure you know this, but that's how McDonald's still do it effectively with their franchisees. They have to, they're basically in a store for 6 months before they're given the franchise. So they see all sorts of different stores in that what is considered, I guess, their training period, and they're probably the only business that does that. You've already paid your fee over it in a way, and you have to still show and demonstrate that you can run a restaurant before starting. It's quite an unusual one, but they're in a strong place to be able to do that, of course.
Yes, I think when you've got that level of success, you can dictate to a degree as to what it is that you want from a
But the interesting bit with what you're saying about the manager coming in is at some point they will have to invest in that business. Now, that might have been prearranged as to how much that would be, or whether that's a helpful purchase by way of some sort of phased payment, because that manager may be the right person but may not have the funding, and that's sometimes the challenge with maybe a manager that has some savings but maybe not enough for a large investment.
Yeah, and I guess that's where either banks are coming in, or lower cost franchise opportunities, or shared equity.
Yes,
I've had the conversation before as to what makes a franchise opportunity, and where the line between employment and franchise opportunity sits. And some low cost opportunities might be edging closer towards employment than they are a saleable franchise opportunity, but the risks are much, much lower. The investment is much, much, much lower. And it's a really interesting one. Let's say hello to a few people. We've got a couple of questions that have come in here. Let's say hello to the lovely Leslie Flowers from North Carolina. Great to have you with us, Leslie. Leslie has her own LinkedIn Live show on a Friday and a Monday, actually. But the one on the Friday is all about the book Think and Grow Rich. And it's an excellent live show, so please support her and listen to that one as well. She's put hello, friends from North Carolina. We've got a good question coming up from Simon. We're going to have a look at that in a minute. But we've got the lovely Joe Caruso, who each week challenges me to try and pronounce where he lives. I could look this up, but I like the idea of just pronouncing it. Here we go. Right. Good PM/AM from high above the sunny shores of Havre de Grace, Maryland, at the Susquehanna River and the Chesapeake Bay at Franchise Info LLC HQ for retained franchisor advisory and franchisee recruitment. Well, look, it's fantastic to have you with us, Joe. Joe is a huge resource if you are looking to franchise in the US. Definitely reach out to Joe. Now, Joe's going to give me a score. I feel I've let him down on the Havre de Grace bit. Havre de Grace? The Grace? Anyway, it's one of them. But it's great to have you with us, Joe. Really looking forward to hearing your thoughts, actually, on how funding and finance differ in the UK and the US. How does it work over in the US? What is the sort of relationship between your banking institutions and your franchise businesses there? Looking forward to hearing that. Let's have a look. Let's get into this one. Simon's put, banks don't seem to be concerned that franchising is unregulated. Is that a point that is often overlooked in the we need regulation debate? Look, I have this debate quite a lot on this show because we're unregulated here in the UK. But I guess as a bank, what you were looking at, it's not necessarily about regulation. It's about what the safety of the lending the money and the chance of that being repaid properly and regularly, and whether that's regulated or not, you're just looking at those risks, aren't you? I mean, how do you respond to this one, Mark?
Yeah, it's a good question, Simon. There's plenty of I've got plenty of experience of where a franchisor might be regulated, but it isn't one that the banks have wanted to support because, okay, they're regulated, so they have to disclose certain information. But if that information that's disclosed is of a financial nature, for example, there's the FDD in the US,
Sure.
And it might disclose all the legal disputes they've had with franchisees, doesn't necessarily give the financial position, whereas as banks we're in quite a lucky position, you could say, is that we can see how the franchisees that we have perform. So we all know from the UK, the BFA survey, that failure rates in franchising is very low, as reported by franchisors in the survey. So, but what the banks also know is that from the franchisees that we have, that the failure rates are also very low, and they're often restricted to either someone that isn't following the system. I've got a little bit of an anecdote of somebody soon that was doing something quite outrageous as part of the system. So there's nothing that a franchisor can do to legislate that. And we as a banks, we as a collective of banks, shouldn't take that person's actions against the system itself. So so just because it's regulated doesn't mean to say that it's a good franchise, because we will, if they've got an FDD, doesn't mean to say they're any good. And so I know there's a very large franchise network that the banks were very unsupportive of after the financial crash in sort of 2008, 9, 10, 11, and whether they are now, I don't know. But certainly we stopped lending to one, but they were still regulated. They still produced their FDD every year, and what have you. So it's more about our assessment of the franchise, whether they're regulated or not. So, and that's really what we did as a bank and that comes down to whether someone may be a member of an organisation or not. So the BFA without a shadow of a doubt, adds credibility to a franchisor, but it doesn't necessarily mean that their failure rates are either reported to them, but we might see them because our bank accounts are closing. Now, that unusual experience of a very good franchise that we were supporting, their franchisee was flashing staff and customers. So obviously the franchisor terminated them immediately. We as a bank were lending to that franchisee, but fortunately or unfortunately for him, we had security over the property. So obviously they lost their house ultimately because they were actually imprisoned. So but we still took a very positive view of the franchise because the franchisor was open and honest about what actually happened. They didn't try and hide what happened.
They were open.
Effectively, if you Googled that man, you could see exactly what the court proceedings and everything. So those sorts of things are, and we would take that as an absolute one-off. But you could argue that was down to selection, but he hadn't done that before. There was no evidence.
I think it's really interesting, and I think one thing that you said there that resonated with me is, as a bank lends to a franchise model, whether that's whatever sector that is, and as they continue to lend to that particular organization, and if you stick with the same bank, like you say, you've got your own banking history then to look at within that model, which then supports further lending to that same model if as a banking institution you're seeing continued and stable success through various different franchisees. You can really start to trust that model a little bit more, and it really adds what it gets easier, I suppose, as time goes on.
I think bankers now, and obviously towards the end of my time with a bank, are much more fortunate than they were when my predecessors were assessing franchisors, because a lot of the technology is around allows them to capture trading information, and perhaps in the zeros and the franchise management systems that allowed franchisors to capture key bits of information. So now they're able to share information with us if they feel able to or can do. Well, in a way they have to if they want support from the banks, really, especially if it's a bank that has limited franchisee trading. So obviously, as a franchisor, you've got to disclose. You might have to disclose it legally, but you've got to disclose it to the British banks anyway, so that they can see how the network is trading. And I used to have meetings with a number of franchisors that would talk about every single one of their franchisees and say, oh, you might have an issue here, you might, with ours, but also with maybe the others, just to say, well, you've got one that's a problem, but there's a couple elsewhere that I should just tell you about. It's about being open and honest with your bankers and telling them warts and all that's going on. If there's a problem, to tell us sooner rather than later. As we'd always say that about a franchisee, if they were starting to see problems, maybe before a franchisor has.
Yeah, that's it. You can see it. There's two ways of seeing it. You can see it in the numbers. You can see it in a P&L. You can see it in a return of some sort. But you can often see it before that happens. And it's sort of judging those two things separately and as they come along. Let's have a quick look. We got a couple more comments coming in. We're at about the halfway point today. Oh, look, I've got a score from Joe. What did I get? Oh, Nice. Joe's put Harvey Tuck, brilliant effort, and today's score is a solid 8.1 out of 10. That's one of my best scores. So I've obviously improved. Although it does go up and down as I then forget by the next week.
I'm glad you did it rather than me, that's for sure. I'd probably get a 1 if I was lucky.
Oh, well, there you go. It's not easy. I practice every week, but then I forget every week. We've got a lovely Lisa Feverick with us, stopping by to say hi, everyone. Lisa supports women who are going through the menopause with great dietary advice. So it's always good to have you with us, Lisa. Thanks for being here. I'm going to ask you about Campari and ice.
Please do.
When we were talking before this went live, you mentioned that, and I thought, oh, it's time to crack open the cocktails, really get into this. But it's not going to be a cocktail, is it? I'm afraid.
No. Well, many years ago, when I did my banking exams, Campari and ice was the way in which we assessed anybody that wanted to borrow. So you can think of this as a franchisor that you're looking at from a banking point of view, or a franchisee that works hand in hand. So if you think of the letters of Campari and ice being the things to remember, so the C in Campari is the character of the individual or individuals. So if you're looking at the franchisor, what have they done before? Have they run this business successfully? Have they had any other failures? What happened in that instance? And the same with the franchisee. So their general sort of character, how they come across. Are they a bit secretive? Are they open and honest? All that sort of, you could say it's a bit of the softer side of it. The A is ability. So precisely what have they done before? And the best thing to bring this out is probably a CV. What sort of things has a franchisee done before? M is for means. So what do they have behind them towards the proposal? This is probably more aimed at someone that's borrowing, really. So how much are they putting into the total cost of the business?
Yeah.
And what else do they have behind them other than that? Do they have other savings? Do they have other assets? Property maybe that you can pledge. So what's the means? The P is the purpose. So what do they want it for? Well, I want to buy a franchise. So you think, oh, that seems reasonable enough, but it could be that someone's after an overdraft facility.
Yeah.
So okay, is that really what you want, or do you need a loan? Because if an overdraft facility should just be short term, so cash flow should enable you to pay it off at some point soon, unless you're a continually growing business, maybe. So what's the reason, purpose? Then what is the amount? Is the second A in Campari? How much are they looking for? Is that reasonable? So if the franchise is 200,000, are they looking for 300,000? Why are they looking for that? Is the amount, does it feel right? Can that amount be serviced? And which is the R, really. You come into the R, which is repayment. How are they going to repay the loan? So this is where you're looking at the profit and loss that you're being presented with, and does it allow you to repay the loan? Is there sufficient profit in the business, or Ebitda? And does it give a little bit extra than just enough to repay? Is there a bit of leeway in there? Is there a bit of extra profit that will allow you to make those repayments? And the I is insurance. Now, it isn't actually insurance. What that means is, what are we going to get? Have we got some form of security to repay us if it all goes badly? So typically that might be a government loan guarantee scheme, or growth guarantee scheme, as it's now called here in the UK, or small business loan, or something of that nature that someone guarantees that. Yes, the SBA, as I think Joe has put up there. So yeah, and again, as with the US cap of 5 million, the UK cap is 2 million. Probably reflects that franchisees are generally smaller in that instance. So there is that, or is it their property that they're putting up as security, a second mortgage, or something else? So that's the Campari element. So character, ability, means,
Before
purpose.
we get on to the ice, and I
Yeah.
don't want to freeze. That's good, isn't it? Too long before we drop the ice cubes into this wonderful acronym. I think we thought this was, but
Yeah.
I did want to bring up Joe's comment here because I think at this part of that it is quite relevant. Let's read this one from Joe. So Joe's put in the US franchise financing is often done through government guaranteed SBA 7A and 504 programs that protect the downside for the lender. There's a cap of 5 million in aggregate borrowing, so multi-unit franchises will have to move to traditional conventional banking sources who are often the same as the preferred SBA lender. Yeah, really interesting. We had just spoken about insurance.
And I think those schemes, wherever they are and whoever they are, they're there to protect the lender in the early days of a franchisee trading, because there's no guarantee of success. But when you get to that sort of level of lending, you'd like to think as a lender you'd be happy to lend based on the cash flow that's being generated. So it becomes more of a cash flow lend. So they might borrow for another store or a tranche of stores, but the cash flow or the profit that's being generated by the stores already in existence will mean actually those new ones don't actually have to be profitable to service the debt because the existing ones will do it. So it becomes almost cash generative for a lender. Obviously, there's the other side of the coin, is that the franchisee may have sufficient cash they don't need to borrow anymore come to there, because they've got so much cash because they're so successful that they just expand using that cash and plan for it in the future. So I get that the cap is in place because it's there for a lender for the uncertainty that will be repaid back. But if it gets to a certain size, we really should be happy that the individual is good enough at what they do to expand further by way of debt.
Yeah, it's really interesting actually, and especially when you start talking about multi-site operators, they have to a degree grow organically, even with that support from a bank. They can't sort of go to a bank and say, I've got a great idea, I want to open 100 sites here, can you help me out with this? Having not opened one before. A much better way to do it is to open one, prove its success, and like you say, I found that really interesting that there's a sort of the cash flow, so you can borrow for the next one based on the cash flow of that one rather than on the potential of the next one. And then you might be borrowing on your third and fourth based on the cash flow of your first and second.
Or the profit. One or other. It depends how your banks calculate. Some calculate it on cash flow, and some base it on profit.
Oh, I'm back.
I thought I lost you then for a minute. I thought I was talking to myself. Just a reminder for the hat, it's because I'm a lone arranger, for those that might have joined late. That's why I've got my hat on today.
Absolutely. And it's a very nice one as well. But yeah, that's really interesting to see how banks kind of view either profitability or cash flow, and a lot of people, unfortunately, even in business, don't seem to understand the breakdown of what profitability really means. The old adage of the fact that turnover is vanity, right? But it's a very easy one to calculate turnover or revenue, isn't it? Because it's just what is generated. Nothing's come off it. There's no debate as to what it is. That's what's come in. But there's so many debates as to what that net, what that profit is, and how you define it. But you said that banks often look at an EBITDA, do they, or is it?
Yeah,
Is it
I think the smaller the business is, the more likely it's going to be looked at, and the profitability of it. Cash flow comes more the bigger that you are, because that's what's more likely to pay it off. Sounds very simple way of saying it, but yes. So yeah, EBITDA is normally at the lower end what is used. So if you've got a business generating EBITDA of 50,000, say for example, your loan repayments would want to be only sort of 35, 40,000. So there's a bit of leeway in that. And the same, it's just a very, but in the end, you start looking at, well, how much cash is being generated, and you do it as a much, it could be much lower. So it's generating, I don't know, 100,000 to 100 million or whatever it might be. And it's more, okay, so we're happy to lend 900,000 if it's $1 million generated in cash. So the figure gets larger when you start to look at it as a cash flow lend rather than EBITDA, because EBITDA can be quite a little bit more volatile.
Yes, and again, there's an old adage that cash is king. The actual money that you've got available in a business at any given moment is so vital. As soon as you've run out of that, you're in a very tricky situation, unless you've got a lot of support. Hence the reason you're looking at all of these securities and these, safety sort of zones. You're not going to max out everything and lend to people that are wanting something that's a bit too close to the max. But before we finish, we must get to the last part of that. Otherwise, our Campari is going to get warm, isn't it?
A bit warm, yes. Ice. So Campari is more, the Campari part is more about the proposition that you're looking at as a lender. And the ice is about what you get back for that proposition that you're looking at. So I is interest. So what interest do you charge based on these days most interest rates are fixed based on how much you're borrowing and this, that and the other. So you don't have too much flexibility, but it will vary. And it's a bit counterintuitive, because the more you borrow, the lower the rate normally. And that is because the more you borrow, the more likely you are to pay it off. It sounds strange. The less amount that you borrow, the more likely you are to default, because you could just walk away because it's only £5,000. Where if it's hundreds of thousands or millions, you're more likely to keep going and try and get it back, because that is a bit more of a hit for you personally. So
that's very interesting, actually, what you just said there, because I remember someone telling me this, and I don't know if this is in the same sort of vein, but someone says if you borrow £1 million from the bank and you can't pay it back, then you've got a problem. But if you borrow £100 million from the bank and you can't pay it back, then the bank has got a problem. I don't know if that is true.
Yeah, that's true. Yeah.
It's certainly, as it gets more, everyone's taking that sum of money a lot more seriously.
Yeah. So the ICE bit, you really have to think about what's in it for us to lend to this person. So interest you charge accordingly, commission or arrangement fees, so they can vary depending on the size of the loan and where it's come from. And the E is extras. So what other services do the banks offer that they might find useful?
Really interesting. What was C, by the way? I hadn't written that down.
Commission. So what's the fees that you get from it? The arrangement fee and I guess the charges in due course that you get from the business on a month-by-month basis for doing all the transactions that a business does. So yeah, that can, to a certain extent, be a little bit more subjective based on the business. And again, all these things get easier and lower for a customer when they're the more established they are and the more successful.
Yeah, absolutely. We've nearly come to the end of the first part of today's show. Let's have a quick look at this one. In the US, some lenders also sell SBA-backed asset-backed securities as bonds to recycle the capital to relend it. Yeah, it's really interesting. I mean, there's all sorts of ways of doing this. I mean, I was talking to somebody who was growing a very large business in the UK, and the way they had to get their finance, it baffled me. You know, they were holding back part of one loan effectively to help secure the next one, and it was, yeah, it was very complicated. But yeah, I mean, what do you make of this one? I mean, I guess, is this a US thing?
It's not something I'm particularly familiar with, but that is also something that I guess that's how the bank would, or the small business lenders, raise more funds to lend to franchisees. I think here in the UK we don't. There doesn't seem to be an issue with the banks lending money. I think HSBC recently had a £500 million fund purely for franchise lending. I know when I was at the bank, when we'd had a franchise department for 25 years, we did £100 million loan and got a lot of PR out of it. But and it's a bit of a gimmick, because the banks normally would have as much money as franchising needs. So, but there is another way of doing it, because there's the security for the lending that you do. It's not something we do here in the UK, or have done so far.
Definitely not. Well, we have come to the end of the first part of today's show. I think it might be good to end with just getting your thoughts before we go to the last part of the show. Just getting your thoughts on what you think the future of banking is going to look like in the franchise industry. Do you think things are going to continue in the positive light they are? Is there going to be any more reservations? What do you think the future looks like?
I can't foresee there being any change. I mean, yes, things are more difficult for a lot of franchisors and franchisors because of the cost of living and other challenges on their business, labour rates and things like that. So I don't envisage a sort of an overnight change for sure. They might, as I alluded to earlier, banks might take a view on particular concepts or a particular industry where they've had a lot of problems or concerns around it. I know, and there have been some in the past, but in particular sectors. I mean, the bank I worked for had quite a poor track record generally of home care businesses, but we didn't have that in the franchise sector. So we were able to say, well, so whilst the bank generally wouldn't lend to a new home care, domiciliary care business, we would if it was a franchise, because the track record was pretty much unblemished. So there was always, and I would like to think that would be something that would continue, whereas maybe the sector may have an issue, the franchise part of that sector, provided it has a better track record, won't be tarred with that same brush.
Excellent. Well, look, that's good to hear. It's good to hear we've got a positive viewpoint, at least between the two of us, about the industry in the future. We have now come to the end of the first part of today's show. This is the part where my camera will go off for a little bit. It's not because anything's broken, it's because you're not allowed to see me without wearing some sort of hat. And now I've got this beauty on. Look at that one. And this is, of course, brought to you, exactly, yeah. It's brought to you by PJ Murphy and Sons, bespoke British hatters. It's my lovely friend Paul Murphy who made me this hat, and one that's behind somewhere over there that you can see as well. So if you want one of these, please reach out to Paul. Now, this is also the part of the show where we're going to stop talking about banking and franchising for a little bit. And we're going to find out a little bit about Mark. And he's going to get his chance to get his own back on me as well and ask me any question he likes. So we're going to start off by asking Mark, have you met anyone famous? Have you got a claim to fame or some sort of interesting hobby? You can choose any of those.
Claim to fame, interesting hobby. I've got an interesting story about
Go on.
someone that's famous.
Right.
Well,
Go
but
for it.
you have to know who the individual is really.
Okay.
Um, so, and I can't remember the name of the TV program he was filming. So, quite a few years ago, we were doing. There was a seminar, an event at a hotel in Leicester, and in the same area there was a TV series being filmed. So the whole of the cast was staying at the same hotel that I was staying at, and one of the actors that was in the film or in the series was Max Beasley. So you may or may not know who Max Beasley was.
I
So if you
do.
don't know who he is, search him out. He's not an A-lister. But he was at that time. He was quite well known, and one of my colleagues I was working with at the time thought he knew who he was. So he went up to the bar and said, "Oh, hi, Max," because he obviously knew who he was
Yeah.
from his celebrity status. How are you? And it transpired that they didn't know each other, but they lived very close to each other. So we all got chatting with Max at the bar, and we had an absolutely fantastic evening.
Amazing.
Just drinking and doing all those sorts of
There
things.
you
So
go. Amazing. Good.
um,
Right.
less famous, but somebody that would be one of my idols. So people that don't know, I'm an avid Ipswich Town supporter,
Okay.
um,
Very good.
and when we won the FA Cup in 1978. Which was a long time ago, but I was 13 at the time. So you now calculate how old I am. When we scored the winning goal, in those days you could only have one substitute. Well, the substitute that came on was a guy called Mick Lambert. So I've played with it, and you wouldn't know him unless you're an Ipswich supporter, probably. But I've played golf with him on many occasions. I used to play with him virtually weekly at one point after he retired from playing football. So
Oh, wow.
a couple of, well, I think he's famous, but probably most people wouldn't know who he is. But
Love it. And you're a golf fan as well. I'm a bit of a golf fan. I'm going to organise a franchise golf day at some point as well. So
sounds like a
I'll
great
mark you down for
idea.
that.
Yeah.
Well, look, I promise you could ask me any question you like, and you can let me get away with it, or you can ask me any question you like right now.
Now, you'll have to forgive me because somebody may have asked this before, but I wasn't. I wasn't aware of what it is. When was the first time you started wearing hats?
It has been asked, but I will answer it. The hat was because I used to watch a LinkedIn Live called Hour of Empower. Lovely chap called Don Cohen, who did a LinkedIn Live every day for 700 days, often with nobody there in the audience. But it was about mindset. And I just liked it. It was very much like this is, because that's kind of where I learned it. And I made a comment one day. He put it up on the screen. I thought that was really powerful. Anyway, he reached out. We had a Zoom call. He asked me to be a guest, which I was. And I ended up doing it about 60 times over 6 months. But he wore a hat. And I just thought on about the third episode, maybe I should buy a hat. And I just went out and bought that hat. I didn't think anything more of it. But when I then decided to start the franchise show, I started it wearing that hat. There was something about wearing it that gave me a sense of confidence beyond where it should have been. I don't know, like a character, something like that. When I first started wearing it, but then it started rapidly to become a thing, and people would recognize the fact that I talked about franchising and I was always wearing a hat. And I thought, I'm either going to stop wearing the hat or just embrace wearing the hat. And well, you know that story. So there you go.
May I ask a second, which is
Oh,
more
gosh,
left field?
go on.
If you had a warning label, what would it say?
What if a warning label about me?
Or on your shirt? Yes.
I like that question. I am going to nick that question as well. What would it say? I don't know. This is the first time I'm not sure about this one. What would I warn people about me? I'm quite easily distracted. I think that's what I would put on it. Warning, easily distracted. I like that question though. I like one that makes me think, and that did. Very good.
Yeah, I think I had to think about this because someone asked me. The only reason why I wrote it down because when somebody asked me that, I thought, oh, I think mine would be liable to interrupt during a conversation. So I have a nasty habit. So my wife tells me of she's trying to tell me something, and it's something completely random pops into my head, and I have to say, especially if we're out and about driving, and I spot something, and although she might be in the middle of a discussion about something or other, which could be serious, and I'll say, "Oh, did you see that? You see that man playing the guitar in his car next door?" She goes, "What? I don't believe you." Yeah.
Brilliant. Well, look, we have now come to the end of today's episode. So I'd like to thank everybody who has been here live, everybody who is going to watch this in the future. Please pop in a comment and we can continue the conversation. I think it's going to be one that we're going to have again. I'd also like to thank the lovely Mark Scott for your time and sharing your insights and your experience. It's been an absolute pleasure to have you on the show, Mark.
Thank you, Harvey, for having me, and thank you. I couldn't not.
Absolutely. Absolutely.
See if I can find something suitable to complement your own headgear.
Brilliant. Well, look, it just leaves me to let you know what's going to happen next week. So next week on the Franchise Show, we are going to be talking about franchise tech. The episode is entitled Franchising, Turn It On and Off Again.
Yeah.
Nod to the IT crowd there, and it's going to be with the lovely Neil Muttock, and also potentially a franchisee or a franchisor as well. So we're going to find out who that might be next week. So until next time, my friends, take very good care and join us next week on the Franchise Show, which will be the 19th of May at 5:15 GMT, 12:15 EST. And until next time, take very good care. Cheerio.